Hi guys, so today we'll go through this trade recap of this trade right here. It's a 1 to 4 trade, and yeah, I've still been trading, but just not really recording as much because I've been doing a lot of other work. So anyways, so basically yesterday was Thursday, and I took a short. So this is that Thursday candle right here. You can see that on Monday, Tuesday, Wednesday, it was pretty much like not a lot of action, but on Wednesday, what happened was on the daily candle, we took out this high right here. We took out a pretty higher time frame liquidity, and instead of closing above it, we basically closed right down. So we went up, took it out, and closed all the way down. So it was pretty bearish. So that's why on Thursday I had more of a bearish bias. I did go into the day being a bit more bullish, seeing how we were around here. I kind of wanted to long into the equilibrium of this range, but we can see here that on the 4-hour, we didn't end up closing above that drawn liquidity as well. And then we can see here as well on the 4-hour that there's two bullish fair value gaps here that got closed below. So this candle basically closed below both of these, which led me to think that we might want to continue lower instead of go up. Although like it could still possibly go up, but I would be more bearish since it closed down below this. But again, like I'm not too sure about the bias going for today. I haven't analyzed the charts for today yet, but yeah, I would be more bearish for yesterday just because of this close. And then so we got this inverse right here that we were in, and we also have this obvious bearish H4 that we were in as well. So a bearish H4 and also an inverse H4 that we were in yesterday during this candle there. On the 1-hour as well, we were in that bearish fair value gap. So on the 1-hour at 2 a.m. New York time, we ended up closing within that H4 inverse. So that gave me more confirmation that we might want to come down. And that's pretty much all that we have on the 1-hour. There's not too much, and that's why yeah, yesterday's trade was like an okay trade. I was pretty confident going into it, but at the same time not like that much, just because there wasn't really like a sweep of liquidity or anything. But on the 30-minute as well, a fair value gap, but like times like this, there's so many fair value gaps, you don't want to just take random ones. But I chose this fair value gap in the 1-hour one here because of that 4-hour inverse overlapping. So that's why it was a pretty high confluence area with that time going into 3 a.m. New York time as well. So another thing to note is that it perfectly lines up with this candle, and this 2 a.m. New York time candles ended up closing within the H4 inverse. On the 1-hour, we ended up closing within it. We respected it here. And on the 30-minute as well, we ended up respecting this 30-minute fair value gap. We ended up closing below it. So that's why I got more. As you guys can see, I did mark out a 30-minute bullish one because initially my plan going into the day was to long if it goes into this area. But the reason why I ended up switching bias to bearish was because of that H4. I realized on the higher time frames, it seems more sense to go down because of this H4 closing below, and because we took out higher time frame liquidity. So yeah, that's why I have that bearish bias. Now going into my entry, it's just the same. I just waited for a 5-minute entry here, and to be completely honest, I actually entered here, and as it started going down, I basically had like stops to break even. So I ended up getting taken out here, and then I ended up shorting again somewhere around here. My actual trade ended up being something like I think something like that. So yeah, like a 1 to 5. But this is the original trade idea. So I wouldn't say it's the best psychology because I ended up moving my stops to break even because I didn't want to accept if we took a loss. Yeah, that's basically the execution there. Another thing to take note of is that we have this inducement range right here. All of these lows are basically stacked really close to each other, and they're all just untaken liquidity. So when we have liquidity like this, I tend to become more confident. So this is why I entered there at that 5-minute fair value gap. And then my take profit was actually this low, and surprisingly we actually just went like straight to the tick and then just ended up going back up. And the reason why I had that low was because mainly was just because it was already a high risk to reward, so I don't need to aim for that high. But another reason was because I just aim for that body over there. So sometimes when it's already a high risk to reward, I just aim for the bodies instead of for the wicks, because in case it doesn't want to take out the wicks like right now, it basically just took out the body and just reversed. So sometimes it just tends to do that. So that's why for peace of mind, I just end up taking it off at the body. So even if it had continued downwards, it wouldn't have mattered because I would have taken full profits. Times like this is when you really don't need to be greedy. Like if I ended up extending it to this wick right here, it would be a 1 to 4.66, which would be like barely anything more. And even if it's here, it's just like another 1 risk, 1 R extra. And like while 1 R is not a small amount, it's still not worth the extra risk in my opinion, because it's better to just take this. Yeah, just to do like a brief recap, we have our ultimate sell side liquidity here, entry model being that 5 minute, and overall time frame, all the higher time frames, just the H4 inverse, the H4 fair value gap, H1 and M30 fair value gaps. Yeah, the only thing missing was really just that sweep of liquidity. We didn't really get like a full sweep. That's just part of it, especially when it's like a continuation like that, when we're basically just going into internal range liquidity. Sometimes it's hard to find highs for it to take out. So yeah, I hope you guys enjoyed this video, and I'll see you guys in the next one. Bye.